Fewer loan deferrals. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee. We're going to look at an article from Mortgage Business which is discussing fewer loan deferrals or a tapering in loan deferrals from CBA. Now remember back long ago last year when people started applying for mortgage deferrals. And I remember reading articles about professionals, couples, professional family, husband and wife, who were dependent on loan deferrals to stay in their home. That was a bit of a warning sign. Now, I'm sure a lot of people are doing it just because even though the interest is compounding, they'd rather have the cash in their hands right now, and they could probably deploy that money somewhere else. I'm hoping, maybe it's naive, but that people are using it to pay down more expensive debt. So essentially, they're borrowing against their house at, 2% to pay off a 20% credit card, which kind of makes sense if you cut up and destroy the credit card. So let's look at this here, everyone. But before we do, I just want to draw your attention to how much, that's our GDP. That's not what I want to draw your attention to, but to how many loans were actually deferred. Over $250 billion worth of loans, everyone. So a hefty chunk. I'm hoping Mortgage Keeper, the joke I make on this channel, I hope it doesn't materialize in one way or another. So let's have a look at this, because this is good news. If people are not, if we have a fewer number of people needing loan deferrals with these lockdowns, hopefully they've got control of their finances. Maybe they've got alternative income streams. My own family members, they've gotten now working at the airport, and that's not the best industry to be involved in. They've got another job. I wonder how many people have done that. It's going to be hard to ramp up some of these tourism-related infrastructure again when, we open up and everything's fantastic in the future. That or we're Mad Max, but, either or, it's going to be tough to get people to man the airports or man the Thunderdome, because they've got other jobs. So the lockdowns across Australia are expected to slightly soften the mortgage market, but not for long, CBA's chief has said, as repayment deferral requests have started to drop off. CBA Chief Executive Matt Comyn reported the bank is seeing around 300 to 400 deferrals per day during the ongoing lockdowns across New South Wales and Melbourne, with restrictions have lifted in Queensland and South Australia. CBA has sent out communications to around 500,000 customers, having also made 12,000 calls to business customers in the last couple of weeks to discuss their relief options. However, the loan deferrals have tapered off, according to the CEO, which he admits is not what you would expect. I would expect, at least at this current level, we'll see those numbers over several weeks, he tipped, during a media briefing call on Wednesday. I think the area that we're probably more focused on, as we have just been targeting, either geographical for obvious reasons, and also for some of the sectors, those that are exposed to hospitality, in certain cases tourism, and certain CBD areas in small businesses in particular. He added, the current deferral numbers are also small compared with those in 2020, when the bank's program, which ended in March 2021, saw around 158,000 customers sign up for deferred home loan repayments. The majority of those customers, 123,000, returned to repaying their loans, while 13,000 voluntarily closed their loans, 7,000 switched to interest only, and 8,000 refinanced. Around 5,000 received hardship assistance, while others benefited from a freeze on forced home sales. CBA has committed to a freeze on forced home sales for owner-occupiers until February 2022. See, this is the thing, guys. The banks don't want to see a run on the market. They don't want to see property fall. No one wants to see property fall in Australia unless you're trying to get into property. Then you want property at a reasonable price. There's some people that understand that the value of property, the inflated value of property now relative to incomes of normal people is just not sustainable. But, you're few and far between. If you have that opinion, few and far between. At least that's the feeling I get when we look at the media, when you talk to anyone. It's just property. We're obsessed with property. We need to get off that obsession, I think what we saw that's different from last year, because going in, particularly at the start of the pandemic, there was an enormous amount of uncertainty. And I think most people assumed that the restrictions were going to last for 6 months, he reflected. What we did see post those restrictions easing was a strong bounce back in economic activity. Many customers who took out a deferral last year continued to make payments throughout. The current conditions have started to repeat indicators that arose last year in Melbourne, such as slowdown in property listings, he said, although the market clearance rates are still high. Reflecting on the impact of the lockdowns on mortgage lending, he commented, "I'd say there's just a slight easing in very recent times, so more to the last couple of weeks, not reflective of June, which was obviously a very strong month. Nationally, so maybe there is perhaps a softening. We would anticipate that continues for the duration of the lockdown. But I mean, given the acceleration in the property market, and I think in a market like Sydney, we're looking at about 18% capital gains growth over the last 12 months. Just think about that. First recession in 28 years, pandemic locking up the entire world, tourism destroyed, international students no longer in existence here in Australia pretty much, migration stopped, 18% capital growth in Sydney in the last 12 months. You just got to laugh, everyone. Just got to laugh. I was talking to a viewer today. He's moving to Sunny Coast, doing a development there, some houses, getting out of Sydney. Wants a house, not an apartment. So 16% or so on a national basis. A slight easing is in some ways a good thing. CBA has still been optimistic about Australia's economic recovery and prospects, predicting strong growth in 2022, although it believes the current lockdowns have pushed out some forecast growth factors by around 6 months. Meanwhile, the bank's 2021 financial year results were published on Wednesday, revealing a cash net profit after tax of $8.6 billion, up 20% the year before. Well, there you go. You know what? I'm just going to change here and let's have a look at the CBA share price, everyone. Because, I mean, that's a staple of the stock market here in Australia. And there we have it at $105. And what do I have here? Do I have max? Boom, there you go. So look at that fall that we had, and it's climbed right back up from that. Not bad. Not bad. So CBA also launched a $6 billion off-market share buyback, while declaring a final dividend of $2 per share, adding to a total full-year payout of $3.50 per share. The bank cited an improvement in economic conditions and outlook, resulting in a lower loan impairment expense and strong contribution from volume growth in all core markets for its strong result. CBA's total loan book, including Bank West, surpassed $500 billion, reaching $516 billion as at June 2021. However, the proportion of new loans written by brokers fell, with brokers making up 44% of new lending, down from 47% in June 2020. Well, isn't that because the conditions and onerous requirements they're putting on brokers is so much more than the banks? You go to a broker now, they got to jump through all these hoops. They got to pretty much hold your hand, like you can't even make any decisions, where the banks can kind of get away with not doing that. I thought that's the only thing that's come out of the whole Royal Commission. It stuffed it up for the brokers, made it better for the banks. A spokesperson for CBA, however, alerted mortgage business sister publication, The Advisor, that the bank has boosted investment in the broker channel, adding 25% more full-time staff to support brokers. My understanding was if you're a mortgage broker with CBA, you have to meet a certain quota as well. It's a tough game, guys, being a broker. Meanwhile, CBA has flagged an upcoming direct-to-customer digital mortgage offering called Unloan, backed by venture capital arm X15, and expected to roll out later this year. The business will be the second digital property buying venture under X15, following Home In, which is marketed as a digital assistant for property purchasers. So there we go, everyone. What is the takeaway to this one, guys? What is the solution, the lesson, or the consideration from this? Well, here's something to consider. Loan deferrals are not as high as they were in the past. I'm hoping, perhaps naively, that people are better prepared for the situation that currently is. Maybe some people were just scared and concerned of the unknown, and I've heard of people taking loan deferrals even when they didn't need them, just to stockpile some cash. Could that be what we're seeing here? There's already a clear divide in the economy of those that are doing quite well, have not really been impacted by the lockdowns or the changes in working at all, and others that have. Perhaps we're seeing that here in the loan deferral requests from CBA. And what does this say for the economy moving forward? Do you agree with their predictions that, next year will be good, but perhaps a little bit later? I just wonder what will happen when the market, when international students, migrants, and foreign property investors return to Australia. Because I bet you that's going to be the magic result and plan of our political leaders. What do you think, everyone? And let me know if you bought some CBA shares, or is it an investment that you would consider holding? As always, thank you all for watching. Like, share, and subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon, sign up for SelfWealth or Stake, use our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband, buy a merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, and I'll see you all next time. Bye for now.